Okay, let's talk about something truly audacious. We're talking about a plan to build a global financial hub, one that's meant to go toe to toe with giants like Singapore and Dubai, but built completely from scratch, right in India. It's a huge, huge gamble.
And this wasn't some quiet ambition. This was the vision they laid out loud and clear almost a decade ago. It set incredibly high stakes for this project, which is officially called Gujarat International Finance Tech City, or as everyone knows it, GIFT City. No pressure at all, right? And that really is the million-dollar question. Can you just decide to build a world-class financial center? Because if you look back at history, these kinds of top-down projects are incredibly hard to pull off. And more often than not, they just don't work out.
I mean, many have tried and failed. Moscow's big financial district, it ended up mostly empty. Kazakhstan's hub is still just a small player on the world stage. And South Korea's super modern Songdo city, it just couldn't get enough investors to bite. They all ran into the same classic chicken and egg problem.
And that problem is all about something called network effects. Think about it. For a financial hub to really work, you need the banks, you need the brilliant financial minds, and you need tons of money flowing through the system. And you need it all at the same time. The banks won't come if the talent isn't there, and the talent won't come if the jobs aren't there. So a new hub has to somehow kickstart this whole cycle from zero. It's an incredibly tricky balancing act.
So what's the secret sauce? Is there a recipe for success? Well, experts who have studied this stuff for years have kind of figured out that there are four key ingredients that any successful financial hub absolutely has to have.
Let's just quickly run through them. First, you obviously need world-class infrastructure, shiny buildings, blazing fast internet. Second, you need a legal system that big money investors actually trust. Third, you need a smart plan for rolling out different financial markets. You can't do it all at once. And maybe most important of all, it has to be a place where talented people actually want to live and raise a family. Keep these four in mind because they'll help us grade Gift City's report card later.
So that brings us to the big why. Why is India taking on such a difficult challenge? What's the real motivation here? Well, the answer boils down to one simple idea: onshoring. Basically, bringing business back home. You see, for years, there was this strange situation where a massive amount of financial trading based on India's top companies wasn't happening in India at all. It was happening in Singapore. Foreign investors were betting on India's main stock index, the Nifty, but they were doing it on the Singapore exchange. All that business was benefiting Singapore's market, not India's. And if you want to see that onshoring strategy in action, just look at this number. On a single day, July 3rd, 2023, a mind-boggling $7.5 billion worth of those derivative contracts were moved from Singapore directly to Gift City, just like that, overnight.
But it's not just about the stock market. The vision is way bigger. They also want to lure back Indian venture capital funds and startups that set up shop in places like Mauritius or Singapore to get a better tax deal. And get this, they want to create a hub for aircraft leasing. That's a huge industry that right now India completely outsources to other countries.
Okay, so that's the grand plan. But how's it actually doing on the ground? Well, you have to give them credit. In its first decade, Gift City has definitely put some major points on the board. This isn't just a dream anymore. There's real progress to talk about.
That main goal of bringing the Nifty futures trading back home, it's been a monster success. In May of 2024, the monthly turnover for what they call the GIFT Nifty hit a record of over $102 billion. That is a huge win and a massive validation of their core strategy.
And the rest of the ecosystem is starting to bubble up too. You've got over 200 investment funds registered there, raising $15 billion. Big international banks, we're talking JP Morgan, HSBC, Citi, have all set up offices. And they've already processed $500 billion in transactions. That is not small potatoes. So, things are looking pretty good, right? Well, not so fast, because despite all those impressive wins, when you scratch beneath the surface, there's still not enough proof that Gift City is a true global powerhouse. And that's because it's wrestling with three really fundamental challenges. And this right here is the heart of the problem. Gift City is trying to be this wide-open, international, almost duty-free zone for global money. But it's located inside the larger Indian economy, which has much stricter rules about how money can move in and out. It's like trying to have a tiny slice of Las Vegas operating inside a country with very different regulations. That creates constant friction. So what does that friction actually look like?
Well, Gift City has its own special, unified regulator that's supposed to be a one-stop shop. But in reality, it often gets second-guessed by India's powerful central bank, the RBI, and the main markets regulator, CB. For instance, the RBI recently hit the pause button on new family offices setting up in Gift City because they were worried about potential tax loopholes. That kind of back and forth creates uncertainty, which is the one thing global investors can't stand.
And this fact really brings the challenge into focus. While that derivatives trading is going gangbusters, the actual core stock market, where companies raise money by selling shares, is practically silent. To this day, not a single company has completed an initial public offering, an IPO, in GIFT Nifty. Trading volumes for everything else are super low.
And then there's the people problem. You can build the shiny towers, but you can't force a community to appear. About 28,000 people work in Gift City during the day, but only a few thousand of them actually live there. Some people have called it a ghost town because it just empties out after work hours. It doesn't have that vibrant social scene of a Mumbai or a Bangalore that would convince top executives to move their entire families there. Now, to be fair, they also had a big dose of bad luck right at the start. A huge infrastructure company called ILNFS, which was a key partner in the city's original planning, had a massive financial collapse. It's kind of like one of your main builders going bankrupt right when you're laying the foundation. It just slowed things down and really shook investor confidence when they needed it most. So where does all of this leave Gift City? What does the future hold? Well, I think the most important thing to remember here is that building a global financial hub, it takes a very, very long time. I mean, just look at the established players. Both Singapore and Dubai took a solid 20 years, maybe even longer, to become the powerhouses they are today. So at just over a decade old, Gift City is basically still a teenager. It's got some really promising results, but it's also got a lot of growing up to do. And that brings us right back to the big overarching question. Is Gift City on the path to becoming a true global powerhouse, or is it always going to be stuck as the city of contradictions? In the end, its success is probably going to hinge on whether it can solve that deep conflict between its global, open-for-business ambitions and India's more cautious, protectionist domestic policies. And for that answer, well, only time will tell.